Can you hear me? All right. If you can hear me in the chat, please let me know. All right. Somebody let me know my audio is working. Hey, what's up, Dominic? How's it going? All right. Let me get this set up. All right. Okay, you can hear me? All right, so what I'm going to do is I am going to redo my daily profiles. That way, like I can figure out like if there was something I could have done better for the 1130 to 1600, and can I front run this one right here, the 7 to 1130, and then we'll go from there. Let me get this fixed. This should already be installed. All right. So at the beginning of the day, every single day, I've been doing it for 9 months. I wake up at 5:30 and I put this on my charts, right? And they're the statistics that I want to use to make decisions around, right? Now, with that being said, let me do this real quick. And all right, there we go. Okay. All right, so what do I start with? So I have my own database, which is eventually going to go use these ranges, right? Damn it, let me redo that. So what I'm trying to, nope. So let's draw this out, right? Let's write this out. High and low of the day by percentage and time, right? We have our time-based probabilities. We have our structure-based probabilities. We have our previous day probabilities. We have our projection-based probabilities. We have our RTH probabilities, RTH gap probs. All right, and then let's see, what am I forgetting? RTH gap. All right, and then we have our 10-day average range. We have our 4 periods of distros, right? So what I'm working on, right? So anytime you trade statistically, right, you have to have a live price component, right? When you trade, purely statistically, there's no need for manual trading. It's as simple as find a coder, have them code up the system, and set the parameters, and then just maintain the system, right? Because like the problem with trading purely statistics without a live price component is you as the trader aren't going to be disciplined enough. And as long as you manually press the button, you will have to maintain discipline, position size discipline, following your trade strategy discipline, all the different disciplines out there that we all know about, so I won't reiterate. Right? So my live price component is Asia variables and London variables. And then I have a New York AM and a New York PM. Right? So based off of when I do this whole workflow process at 5:30 in the morning every day, right? The component that I'm trying to project are these two time frames, right? So there's 4 time frames, right? You have 18 to 2:30, you have 2:30 to 7, right? You have 7 to 11:30, and then you have 11:30 to 1600, right? Before we can start focusing on that, right? And the reason I'm going to start doing this more and more each day is because I'm just getting complete with building my database where I like it, right? So let's go through and do it all together, right? And every day I'm going to try to jump on here and do it after the fact. I do it obviously live on YouTube every morning at 5:30, and then I'm going to come back and redo it so I can get double the reps in. Can you guys not hear me? Dominic, can you hear me? Can anybody hear me? I don't even know how to check to see if my own voice is working. Can anybody hear me? Hello, hello, hello. Okay, so if Dominic can hear me, then everybody can hear me. All right, perfect. All right, so, right, if you're part of the DR community, you guys use 3 different ranges. You use the ADR. Okay, perfect. You guys use the ADR, the ODR, and the RDR, right? ADR being 1930 to 2030, and then for the range, and then based off of what price does from 1930 to 02, like that's the session, and then 2030, or no, shoot, 03 to 04 is the range for the London, and from 04 to 8:30 is your session, and then from 9:30 to 10:30 you guys do the range, and then from 10:30 to 1600 is your session. And so that's how you guys are doing it. I'm doing it these 4 ways because I pulled all the data, and over the last 2,000 days, it makes more sense for me to use the first hour of these ranges because that's over the last 2,000 days when it is more likely to reverse and consolidate, etc. And then, so like for here from 18 to 1900 is more likely to go back and forth and then move in a trend until 2:30. Same with 2:30 to 3:30, 7 to 8, 11:30 to 12, right, is when it's going to reverse the most from a data standpoint, right? So I'm doing very similar stuff like the DR as I should because I spent 2 years, studying, back testing everything DR related, right? But at some point in my journey, I said, like I've done all these back tests on ICT, I've done all these back tests on auction theory, I've done all this back testing on DR. Now it's time for me to build my own workflow. So I spent the last 9 months doing the workflow that you see, and like now my database is getting to the point where I can actually use it, right? So now we're going to start right here. Let me see. I need to go to bookmark right here and reset to start. And I'm going to start with 4,180 days, right? Right here, first step is because in next week I'll have my actual data based off of these, my range data. So for now, I'll use the DR steps. And the next week, you'll notice that I won't be using these ranges anymore. I'll be using the 18 to 1900 as the range, and then going until 230, and then 230 to 330 from here to here, and then so forth and so forth. But for now, we're just going to use this, right? So the variables that I care about, and only I care about, right, is like what does Asia do after 2030 to 2 o'clock, right? So it went short and stayed true, right? So I'm going to come over to my database, and I'm going to say that it went short and true, right? And so now I have 1,281 days left. And listen, if you guys don't have data, guess what? The DR community is outstanding. Like the information that M7 gives you guys and the database that he gives you is more than enough, right? Give me 1 second. All right, I'm back. Sorry, my wife and daughter were yelling about some cheerleading video. All right, so now what is London done, right? Let's see, we're at 5:30 right now. So London went true, right? And like I was saying, like DR data is perfectly fine and is way more than enough for what you need. All right, and that's true. All right, so now I'm going to come down here. And remember the first two steps to measure higher time frame momentum for me is, are we above NFP Friday and previous month 50%? So this is NFP Friday's range. This is previous month 50% right here, meaning I'm expecting the low of the day between 5 a.m. and 11 a.m., right? However, that's going to be based off of what I'm pulling, based off of what London and Asia is doing. All right, so now we can see Asia went short, stayed true, didn't breach the range by 2 a.m., so that would be a true. And then London went long and is true at 5 a.m. in the morning. Right, so now we're looking for our high of the day. And so you have your variance, your mode, and your medium high of the day. And this is based off of 514 variables left. Remember, we started with 4,180 days. Now we have 514 days, right? So we're going to be looking for the high of the day between 0.66 and 0.87, right? So I'm going to come over here. I'm going to put it at the 1800 open. I'm going to go to 0.66, start a box, and 0.87, just like such, right? And so now I want to see my time for that. Right here. And so right here, this is going to be important to look at as well. We can see that these are the probabilities for the 9:30 to 10:30, right? Like I said, in like 2 weeks, it will be the New York AM and New York PM, right? And we can see that those from a percentage standpoint, there's way more above the London low than there are engulfing London and below London high, right? Meaning that from 9:30 to 10:30, there's more of a chance, pretend like this is your 9:30 and 10:30 box right here. It's more of a chance that the 9:30 to 10:30 range will be above this London low right here, right? There's less of a chance that it will engulf both sides, and there's even less of a chance that it will come down and stay below this London high right here from that range, right? So we're going to put high of day, 0.67% to 0.84%, I believe it was, just like that. And then we're going to look for our times. And our times are going to mainly focus right here from 8:30, 9:30, 10, 10:15, and then you have a drop off and it goes flat until end of the day. Right, so we're going to go 8:30 to 10:15, high of day. Right, and we're going to do the same thing with the low of the day. Right, we can see that the low of the day is between 0.67 and 0.94. So we're going to take this and you go to 0.67. And 0.94. Right, majority of it though, when we look at this data, we got to see that majority of the mean. So if I put a mean on here, right, it would be right around here. Right, so in the back of your mind, if you already know that your higher time frame momentum is up, right, bullish, right, you shouldn't be expecting the lows of the days to be, because this 0.94, it means 1% below the 1800 opening price. So maybe it should be between 0.5 right here where we think we see that the mean would be, the average, and this mode right here, medium right here, 0.67. Because right now, what we're saying is that on this random day that has no economic news catalyst, one of these are going to be wrong, right? The low of the day or the high of the day, because what are the probabilities of us taking out both the high of the day and the low of the day? They're very low, right? So let's look at the low of the day time buckets. We can see that right here, the low of the day is here, the high of the day is here, right? And we're going to actually dig a little bit further into our analysis before I explain to you why I chose the end of the day for the low of the day scenario. All right, so we'll just say this is from low of day from 0.5% to 0.64%, right there. All right, now we're going to put our time-based probabilities on, which we know are Globex, which is 1800. We know it is midnight, and we know I use settlement. The settlement price that I use is I go to Google. Let me do this so you guys can see it. I Google CME NQ settlement price. Click on the CME group anywhere. Come to the tab that says settlement. Under the December 24 contract, you check the date. And this one's going to be different. Oh, well, no, it's not. This one's for Friday, October 11th, which is correct. We can see that's at 2450. So 2450. Close enough. All right, and then I'll use this midnight snap indicator, and I'll just put this on 1800. And if you guys have any questions, just let me know. All right, and you can see the pink line showed up for 1800. So I'm gonna put it on it, and then I'll do the same for midnight. And I'll put my midnight price on, right? And then I'll turn that off, and then I'll come back over here. And these probabilities will be based off of what Asia and London have done so far. So remember, the first step was put in what Asia's done, what London done, put the high of day, low of day probabilities, then time probabilities. Well, this is including the variables right now. So we see that midnight between 8 and 12 has 66, settlement has a 68, and Globex has a 69, right? Versus if I just use all data and I don't put that live price variable in, right, set on midnight, we can see that it has a 70%. We can see that 16, 15, let it load, has a 60%, and we can see that 1800 has a 65%, and that's just using 223, the last 223 sessions, right? The only difference I'm doing is I'm using the actual variables of what Asia did and London and what the probabilities during the 8 to 12 probabilities are for me. Right now, I'm going to put my statistical probabilities on, or my structure-based probabilities on. And so all the indicators that you see here that I'm using are free for you to use. So you don't have to pay nobody for them, right? The highest probable, so from 1800 to 06 is where I derive my structure-based probability, whatever the lowest low and the highest high is in the midpoint, right? So every single 15-minute, every single 10-minute, every single 5-minute has a probability. And here's the cool thing about it. From 1800 to 06 of the last 2,000 days, they all have high probabilities, like between 79 and 91. Actually, there's a 5-minute range out there that has a 97% probability of being returned to out of the last 2,000 days, right? But remember, I just want to see the probabilities based off of this with the live price variable of what Asia and London have done. So I'm going to come back over here, and my 12-hour statistics from 06 to 06, 1500. That's wrong. That's the wrong one. This is the daily box statistical high and low. Previous day low, previous day high. Nope, you don't need to see that yet. Oh, right here. Okay, cool. So it's going to be 06 to 1600. No. I'm going to have to talk to my coder about that. He's got the wrong data set, but we're going to use it. And then I will show you once this data set comes out complete, I'll show you how to do that too. This is the wrong time. All right, so previous box high is 85% based off of what Asia and London has done. So we'll put that on our chart. Structure 1. $85, and we're going to call this structure stat high now. And we'll do a structure stat low. and we can see the structured stat low has a 58% probability of being returned to. All right. So now we have our time base, our structure base, and now we're going to do our projection base, right? It's good. Yeah, lady. All right. Coming back to our chart, we can see we have a time base, which are these 3 times. We have a structure base, which is the last 12-hour highest high and lowest low. And now we're going to do our projection base. Remember, all variables came off of what Asia's done and what London's done so far. So return on the vet is going to give us these standard deviations based off this Asia, which all this is changing next week. For my workflow process, I'm going to put the price in 520, and we know that this one is 2.5. So we can see the 2.5 has a 70% probability, and we'll put that in. We'll clone it and put it on the 5 right here. 20591, and we can see that that has a 46% probability. You see this 8, and that has a 31% probability, right? And these are the times, the first hit times, based off of what Asia has done and what London has done. It gives you the probabilities of it, right? And let's go down and get the 2.5 and the 5. Negative 2.5 is a 69, 5 has a 44. We said that had a 69. This has a 44. All right. So now we have our time base, our structure base, and our projection base probabilities on, right? Now, price is played out. Usually this is around 625 now. Weird. Why is this taking so long? All right. So now we're going to do more detailed look at our New York candle, right? We can see that there's a high probability of New York being above London, right? So we're going to come over here. We're going to get our opening range stat, and we can see that the average opening range, so 930 to 1030 is 120, and the average DR range is 176, so 930 to 10. So we're going to factor that in right now, and we see that it is higher probability to be above this low, right? And we know that 8 to 9 o'clock over time has a higher probability of reaching this midnight. We know that 9 to 10 o'clock has a higher probability of reaching this settlement price, right, through data. So what I do is I place this at the base of the settlement, like that. And this goes to 1030, like that. And this goes up. Now we have our average 10-day 930 to 1030 range right there on our charts, right? And we can see already that statistics are contradicting each other, right? So if this is the high of the day zone, right, how can my 930 and 1030 be all the way up here? So that's something that we're going to dig deeper into. All right. And we can see open to high for New York. Actually, this is not, yeah, this is New York. Okay, open to high. So from where the 930 is, goes usually 0.5% to 0.6%. Right? So we're going to take this and see right here, what is this? 0.6, and then it completely drops off to 0.7. Right? So that is doing the 930, 1030, long true, short true. Give me a second. That's what I forgot. This was not broken. This was broken. So I need to put that Asia did get broken. All right, it was broken. That's why it's been filtered. And so 0.6, 0.7, that still stays the same. So that part we got right this morning. All right. And so now we're going to go to our RTH gap real quick, and then we'll go into our average daily ranges, right? All right. So now we're going to look at our RTH gap fills, right? And this is based off of what Asia and London has done. It is not to include the day of the week, right? If you want to do day of the week, you can always come over. First, let's do this real quick. Let's go to regular trading hours. Describe our fib. I have a template set up for RTH. Right, so all I have to do is put the bottom of this fib on the settlement price, wherever that may be. So right here, it's right here. All right, and then I'm going to align this with the actual where live price is. But for now, before I go back to electronic trading hours, I'm going to put the stats in. Right, so I go to this midnight snap indicator, and right here I have gap minimum retracement 25%. I come over here and I see that it is 78% on a Monday. Right, 78% gap fill, 25%. So that means this is going to be 78, right? I'm going to go back to it. I'm going to put it on 50. And I can see that on a Monday, it's 62.5 for 50% gap fill. Right? I'm going to go back and do the same thing for 75. We can see that there's a 50% probability of this 75 to get returned to, right? And then 100% RTH gap filled. It's a 43%. Now, looking at doing it by day of the week, these are the probabilities. And then doing it by based off of just solely what Asia, London, and London have done, you can see that there's an extreme difference, right? So this is the one time where day of the week will matter when it comes to putting my gap fill probabilities in. Usually I keep that out because it takes more of the database away than I need it to take away. But for RTH gap, I want to do it by day of the week, right? All right, so now we can go back to turn this midnight snap indicator, which is free, off, and now I'm going to go back to electronic trading hours. Oh, damn it. Let's go back to 6 o'clock, because that's when I do this every day. I'm going to put this, and then until 9:30, so I usually put this part with the numbers on it at the exact 9:30 moment. Remember, the 100% needs to be on your settlement price from the CME, right? And then as pre-market happens, I just move this part up and down with price, and then by 9:30, I plan it, and then those stay fixed for the rest of the session. All right. So previous day high, previous day low, based off what Asia and London, based off the time frames. This says the highest probability of the high and the previous day midpoint to get hit are going to be from 9:30, so from either 8 o'clock for the high to 9 o'clock, 9:30 for the high, and then 8, 8:30, and then after 9:30 right here is the bulk of the previous day high, midpoint getting taken out, right? So now we're going to go and start doing our distros, right? So we're going to come over here and we're going to do these time frames, right? So this is where this comes back into play, right? So you can see our average 10-day range is 300 handles. And at 6 o'clock in the morning, we moved 121, so 40% of it, right? So this is actually, instead of putting handles, we're going to put 1.44%, right? You can see on a Monday from 1800 to 230 had a 0.43 for the last 30 Mondays, right? And if you go to a 5-minute, right, it would be 0.58, right? Because it's measuring the last 15 Mondays, so this quarter Mondays, right? Because we know that the daily ranges are compressing, they're not getting bigger through time this quarter, they're getting smaller actually. Like we want to go with the larger data set, right? So now I'm going to come over here and I'm going to plant, let me fix that. The 1800 to 230, right? And I have the ability now, because that time has already passed, to put it right in place. And we can see that that range wasn't fully met. So like this much percent of it was not met. All right. And we can see using the VET, which is a free indicator, 230 to 7 over the last 31 Mondays moved 0.45%. So what we're going to do is we're going to put this right over here where the 230 end low is, and we're going to anchor it, right? And we're not trying to project, we're just trying to see if price is moving in an anomaly, right? If the average, the last 30 weeks on a Monday from 230 to 7 moved 0.5%, once we get above here, we're going to be expecting retracement. But if it continues to rocket like it did today, we know that like is the Trump historical data, we know that, like, it's not going off this just what it usually does, right? And then from 9:30 or 7 to 11:30, right, we can see it moves 0.93% on a Monday over the last 30 Mondays, right? So now we know, like I said before, that over time, historically, midnight has the highest probability of getting returned to between 8 and 9 o'clock in the morning. Settlement has the highest probability of getting returned to between 9:30 and 10:30, right? So what we're going to do is we're going to anchor the bottom of this at that midnight, right? Because we know we have a high probability of that midnight being returned to, right? So if we're off, we're off. And right now we can see that the the 9:30 to 10:30 is already trumping it. So this is telling us, so not only is the high of the day statistics off, the distribution is off, and it doesn't synchronize. So one of these stats are not going to get hit, right? If we decide to stay with average, right? So what I like to do, right, when that's the case, I like to give it the benefit of the doubt, right? The benefit of the doubt saying, like, midnight's down here, and I'm going to just expect it to get returned to, right? It doesn't have to. As price is playing out, like, remember, that's why I use these hourly boxes. And remember, we're starting to do that exercise. Let me get off the 15-second, because that's not necessary for this. Where are we? Okay. So remember, we do that. Something's not right. Oh, I'm in replay mode. So remember, we were doing that exercise to see what kind of RTH historically happens over time. DMP versus range versus DWP, directional with pullback of range, using the 930 as a constant variable as the reversion of the mean anchor, or the directional with no pullback. We're going to be using these hourly boxes as prices playing out live to identify the market condition to tell us what kind of trader and risk profile we should have on. But for now, we're just prepping and coming up with our game plan. But because we already have two things, two different statistics, 9:30 to 10:30, and this 7 to 11:30 distro is trumping this high of the day, we're going to give these two statistics a trump card. I'm going to move it to the upside to account for it, right? All right, so now we're going to go back to our statistics. We're going to go to our New York candle tab, and we're going to say New York true versus New York false, right? So if New York true is true, we can see that we're going to move up from 9:30 to 10:30. We're going to move up and then stay in a somewhat of a range day, right? So we come up, but we're going slowly up, and then we start pulling back, etc., right? We're going to say, let's say we went long. Let's say we went above. We're going to collect that. This needs to be inverted, right? So this, let me do that real quick. Nope, nope. I don't remember how to do it. Oh, I have to do it with London. Maybe. I don't. We won't even pay attention to that until I can get Dakota to do this correctly. So this should be inverted. Right, so back to this, we're going to say New York went above London, and that we went true, right? And we can see, let's say we had a false day. That'd be short. All right, so here's what we're going to do, right? We got to put our OU line on right there for London OU, because once we cross this OU line, this pink dotted line, that tells us all these probabilities shift to the downside, right? We already took out previous day's highs, so we know that daily momentum is to the upside. So we do not expect the previous day low to get returned to, right? We know that the average 10-day range is here. So what we're saying is that as of right now, that's what it was. As of right now, this is the low of the day that happened at 2200 until this London OU line is alerting us by price going below it. This is the low of the day, right? So based off of our average 10-day range, we're going to put our high of day up here, right? Because we're expecting it to at least get to 1.5%, right? And then right here, we're saying from 1130 to 1600, we're going to be stuck in this range, right? So let's look at our notes. We talked about how to put the high and low of the day percentage probabilities in with the time. We talked about time-based probabilities. We talked about structure-based probabilities. We talked about previous day probabilities. We talked about projection-based probabilities, RTH gap probabilities, average 10-day range, and then the 4-period distributions we put on our charts, right? So now, right, this is on the right-hand side of the chart. This is the historical data, right? And remember what I say about historical data, live price gets the trumpet all day long. So as price is approaching, like we're right now, it is 6 o'clock in the morning, right? And we know that we're coming up on the max distribution over the last 30 weeks between 2:30 and 7 o'clock, right? We are anticipating a reversal, right? But what gets to confirm a reversal in my world is these hourly boxes and 5-9 boxes, right? As long as we keep taking out the next hour and staying above the previous hour midpoint, just like I do with the NFP Friday and the previous month 50%, like that's live price saying it does not care about this 0.45% that on average over the last 30 weeks moves from 2:30 to 7. So we sit here and watch live price continue to go up, right? Because right now there is no reversal on the hourly, right? We're still above the 5-9 box. We've taken out the previous hour high and we can't get below the previous hour midpoint. And we're in a trending market condition because we cannot take each hour is respecting the previous hour's midpoint. This hour can't take out this hour's mid. This hour can't even come close to this hour's mid. We can't even get close to the 5-9 box. So there's absolutely no fucking reason for me to be selling anything. All right, new hours opening. We're opening on the midline. So this will be previous hour midline once the 7 o'clock hour comes in. And what do? We jump, right? You realize whether it's the H4, the H1, the 5-minute, whatever, we love opening around the midline of that previous time fractal's range and then making the decision, do we go lower or do we go higher? So in this case, we're letting the 5-9 box, we got below the previous hour midpoint, and now we're going to pay attention to this 5-9 box. All right, so now we've gone a step below it. We could not find support on it. We stepped above it, and now we're seeing, does price want to find footing off the bottom part of this 5-9 box? And we can see we're range up. We found footing at the bottom part of the 5-9 box, and now we're back above the previous hour midpoint. And now we are in the 7 to 11:30 range. So what I like to do is this right here. Like I like to, with my distro tool, I just follow it. Testing the 5-9 box, and look at that, a new arrow, and we're opening at the midpoint again to make a decision where we want to go from here. We stepped above previous hour midpoint right here. We came back below, found footing somewhere in here, and now the 5-9 box is developed, minute 5 to minute 9. And we're seeing, can we come up here and take out this high and take out this arrow's high? Will momentum get us up there? We came down and found footing at this hour's midpoint and then around the midpoint of the 5-9 box. And found footing again and took out this hour's. And so whenever you take it out, hour, daily, weekly, 4-hour, right? Right when you take it out, the first thing you should be paying attention to, does it take it out and suck back into the range? And in this case, because it's took out this hour, does it suck back into the range? And is it weak enough to get below the midpoint, right? And then step below the 5-9, find rejection somewhere in here, sell it, right? Until it can do that, like there's absolutely no reason to be taking a short, because guess what? Can this hour get below this previous hour midpoint, and can we take out this low? No. Can this hour take out this previous hour midpoint and get below the low? No, we can't. Can this hour get below the midpoint? Yes. Can we get below the 5-9 box? Can we get below this hour's? No, we can't. So momentum from the hour and the H4 is up, and momentum for the day is now up too, because we just took out previous day's highs here. We sucked back into the range barely, and then we're leaving that above Friday's high. So there's absolutely no reason you should be thinking shorts right now. And you can see we took out this high, this hourly high. We sucked back into the range, and now we already are moving our way back up, and we're about to start a new hour. Are there any questions so far? I don't even know if anybody's listening. Either way. All right, so now we're coming up on the 9 o'clock, and we opened up above the first minute. We take out this arrow, and we have failed to come back into the previous hour's range, right? The thing about the 9 o'clock hour, right, is where we're positioned around that 5-9 box before the open would be very telling. I'll show you why. All right, where's 9:30? Right there. Still can't get below this previous hour midpoint or the low. Right, so now our anchoring point is this hour midpoint, because remember, this is the end of the first 15 minutes. Guess where the midpoint for this 15-minute is? Right here, this yellow line. When we get to the 30-minute, guess where that 30-minute midpoint will be? Right here at that yellow line. And so, like, I'm paying attention to how we perform around this 5-9 box at the open, which is right there. All right, 9:30 opens up, and as you can see, I measure the candle from high to low, the 9:30, because I'll use that as an anchoring point. Does price get above it? Does price reject from it? Do we step above it and find footing on it, or do we swipe below it and reject from it? So far, we're stepping above it, and we're going. All right, so now momentum is still strong, right? There's absolutely no reason to short this. We couldn't even get a body close on the 1 minute below the 5-9 box. We couldn't even get back into the 8 o'clock range whatsoever. So now we're just paying attention. If you're not already position longed. And so now I'm constantly glancing over here because remember statistics told us that from 8:30 to 10:15 they expect the high of the day in this zone, right? So we're paying attention. Doesn't mean we just sell blindly, right? You don't sell blindly. You need, so this is the highest probable high of the day zone now, right? Around this area. It synchronizes with the average 10-day range, right? It synchronizes with the 7 to 11:30 range. It synchronized with this probability. And, oh yeah, by the way, we got to update our RTH gap, which is right there. We have 78% probability, 25% probability. 25% of the RTH gap will be filled is 78%. 50% is 62%, right? So we don't just sell this blindly. We have to wait for displacement, and we have to wait for me, I have to wait for us to, at very minimum, develop a new hour, get below previous hour midpoint, and step below the 5-9 box to go, right? So 10 hour opens up. We're taking out the 9 o'clock hour. We're paying attention. Can we suck back into the range? Or does momentum, we suck back a little bit and then keep going higher? So we're sucking back into the range. Now we're going to let the 5-9 box develop and start anchoring our clues off of that. Minute 9. And now the 5-9 box, we're rejecting from it. So if we are taking shorts, our first target's here. Our second target's around here. Paying attention to, can we reject from this midpoint or get momentum below it? Right? Can we get back down to this 930? New 30-minute in 5 minutes. Now we'll step below this 5-9 box, and now we're coming up to see if we get rejection from it, or do we continue to push higher and the rejection was from the previous hour midpoint. So 50% of the 5-9 box, we're getting some rejection, but we're not getting displacement. We're not getting convincing displacement. So right now, for us to take shorts, we're saying that this small little 50% line is more impactful than daily momentum up, 4-hour momentum's up, hourly momentum's up, all momentum's up, right? We know that statistically we're around the reversal point for the day. We just need proper displacement, right, to convince us that it's correct. And so now you're starting to get it. And so now you can see we completely swiped through the previous hour midpoint. We found rejection from the 5-9 box, and now it looks like we're targeting this previous hour low. And we've maxed out this distribution. We've maxed out our daily distribution. So our average 10-day range, we've already maxed out. We've already maxed out our 7 to 11:30 range, right? So now the next range we have is from 11 to 1600, which moves about 1% over the last 30 Mondays. And so we got below it. New hour opens up. We take out the lows. We take out this low, right? So we're seeing, do we take out the low and suck back into the range? Or do we get momentum to the downside? Where's my 5-9 box? So my 5-9 box for this hour is directly at the 930 price. We're stepping above the 5-9 box, so we want to see it find footing on the 5-9 box or somewhere in this 930 price. There's the footing right there, and it's going to find more footing, right? If it does want to reverse, right? This is the hardest at 5:30 in the morning. This is the weirdest range to try to project, right? Oh yeah, and another thing is you got to pay attention to these RTH stats, right? We got below it, we tested the 25, we met this 78% probability, right? Now we still have midnight settlement to get to as well. And we'll swipe in. Open a new hour right here. We're above previous hour's midpoint, and we're above the high, telling us momentum is now, we're back in that range in market. We're in a range in market. Remember, 9:30 to 16:15. There's three possible scenarios. It's going to be a trending hour by hour from 9:30 to 16:15. Each hour is going to trend higher. We're going to come up and we're going to range around this 9:30. Remember, the 9:30 is a constant variable that we're going to do reversion to the mean around, right? Or we're going to go away from the 9:30, but hourly lows are going to be taken out, right? And then we're going to end the day above the 9:30, right? And remember, based off of our playbook and the stats that we ran with it, right? We range more than we do anything else from 9:30 to 16:15, right? If you don't have a copy of this, like screenshot it real quick and go back test it, right? It's a really eye-opening back test, right? And it lines up with a lot of things I can't speak of because of my job and regulation. All right. So right now, hourly momentum's back up. We're above previous hour midpoint. We're above the 9:30, and we've taken out this hour's high without sucking back into the range. And we're developing this hour's 5-9 box. So can we get down and test this yellow line, the previous hour midpoint? Nope, we can't even get to the 75%. And we're already stepping back above the 5-9 box, which is wild. Stepped above, find footing on. So somewhere in this blue box, we're waiting for the retest. So I gave you 1, 2, 3 opportunities. And now for new hour opening, we'll open in near previous hour midpoint. Momentum's up still. We took out this hour low. We sucked right back into the range. We're paying attention to this midline. If we swipe below it and continue going lower, we're expecting momentum to shift. So we're ranging on a lower time frame. Momentum for the hour is still up. You see this midline? Look how many rejections you got from it. And this is painful, but predictable if you know statistics. These hours, each hour has a characteristic of what it is more likely to do, trend versus reversion. All right, new hour open. Where are we opening? The 50% of this hour's range, like we've seen all day long. We drop, and now we're above it. We couldn't take out this low. You got to pay attention to stuff like this, right? We're already stepping above previous hour midpoint, and we're about to develop the 5-9 box to see if momentum wants to continue up. And momentum does, right? Took out previous hour low, sucked back into the range. We're paying attention to this midpoint, right? Is this a shift? Is this just, taking out this high to go lower? We'll see. It's the 1400 hour. You can see the volatility is contracting the last 3 hours, right? We're stuck in the range of the 5-9 box this whole hour. But we've taken out momentum for the hours up. We still can't get below this previous hour midpoint. Rejection 1, 2, 3, 4 times, right? So now we just need to step above and find footing on. And new hour opens, 50% of the hourly range makes decisions at that point. All right, let's see what it does. My 5-9 box didn't draw for some reason, so I'll have to manually draw it. Oh shoot, I keep forgetting to update that. This is this hour's 5-9 box. We're testing this previous hour midpoint, rejecting it. This yellow line is the previous hour midpoint. Stepping above the 5-9 box, finding footing on the top side, and going higher. And that is all she wrote for the day. All right, so that was the day's daily recap. So the right side of the screen is what I do every single morning on this channel at 5:30 in the morning. Every single morning, unless I decide to be lazy and sleep in, right? This is what I do every single day as I read Price Live, right? So are there any questions before I cut the stream? Let's see. Somebody asked, Yusufa, are you still there? So these hourly boxes come with my my newsletter mentorship, right? It's $8 a month, and you get this indicator, you get all my newsletters, you get all my YouTubes, everything. So hopefully that helped. Any other questions? Ask now. All right, then later.